Hello folks, I'd like to welcome you to the Technical Trading Corner. Many of you are probably joining from the link on my Seeking Alpha article. If you're not, I am on this page. I do have a link that will take you to that article. Today's date is October the 14th, 2015. My article, for those of you who haven't read it, deals with investments, particularly in the oil commodities market. There's a couple of additional points that I wanted to make outside of the article on this site and also over on Seeking Alpha. The first is on Monday morning, what we can expect with regards to oil commodities prices. I have in my article suggested that we're approaching the bottom of the oil commodities price, $40 a barrel for WTI, and suggested that taking up some positions in oil commodities market may generate a nice return over the coming month. There are several reasons why I believe that the price will increase. I think that we found a stabilized point at which supply will be encouraged to diminish. Rigs will continue to close. Supply will drift down. OPEC, Saudi Arabia, Russia will start to feel a little bit of price squeeze and reduce, sort of take their pedal off the gas with regards to pumping the market full of supply, and that we can start to turn towards a stabilized price market. Right now we're in a low price market that is not stabilized for many different reasons from a supply standpoint. We're going to take a little bit of time for the surpluses to evaporate. It's not going to happen overnight, but the $40 mark, $40 to $45 range, should produce enough incentive that the supply decreases will occur over a reasonable time frame and will allow for a return to stabilized oil prices, which will be most likely somewhere in the $75 to $80 range. It's going to take a few years to get there. I think most people have come to that understanding. But if you do hold a long position either in an oil equity or in the commodity itself, the anticipation will be with the unfortunate events that took place on Friday in France, the terrorist activity, and obviously our hearts prayers go out with the individuals that were affected by that, the families and the individuals who were victim to those terrorist attacks. There will most likely be a short position buy-off to open the market on Monday. If you do have a long position, you can probably anticipate within the first 30 minutes of market from 9:30 to somewhere around 10 o'clock, prices will probably advance fairly significantly as short positions close their positions and as they produce tight stops. Probably already had those tight stops as a result of the price resistance as the market closed on the $40 threshold, and then with the uncertainty in the Middle East and obviously those terrorist attacks and the anticipation that there'll be some sort of military activity that could cause a supply disruption, in particular in Iraq, I would anticipate that short positions will close those positions. That will create, obviously you have to purchase shares to close a short position, or you have to purchase oil to close a short position. That should create a spike early Monday as individuals initiate that, and then as the short stop positions that people hold are tripped, and will probably result in a fairly nice run up in the first 30 minutes. Probably won't be sustainable. I do believe in the long term we will see price turn back towards $43 to $44 top of the trading range. And but for those of you who are holding on Monday, look for an opportunity to sell towards the top of the short sell-off, and hold tight stop positions on the way up in the first 30 minutes or so. Prices will probably retreat a little bit, and you'll have the opportunity to extend your purchasing power by selling off at the top of that short sell-off or the short purchase, and then you'll be able to get more shares, more value for your money. I also wanted to explain very briefly the intention of this website. From the investing standpoint, I also have a religious blog that isn't completely associated, but mirrors a lot of the thought processes that I go through from an economic and a financial standpoint. But the main purpose for this blog is to provide technical trading advice. And on Seeking Alpha, uh, they prefer that their writers focus on fundamentals, which is always advisable that you pay attention to fundamentals and don't trade solely on technical basis. However, I do believe that the technical understanding of market activity provides for the greatest ability to maximize returns. And so I put it onto this blog. I've had a couple of articles that have been rejected by the editors at Seeking Alpha because they've been too technically focused. So I've decided just to split that out into this blog, focus on fundamental analysis with the minimal amount of technical analysis on the Seeking Alpha website, and then transfer the technical analysis over here for individuals who are interested. So you're viewing this obviously on a YouTube portal. If you would like to follow me on YouTube, you'll get my advice on an ongoing basis. And you can follow the blog here for technical analysis, pricing analysis, and then obviously find me on Seeking Alpha. I publish under Thurman Dunn, and you can follow my analysis over there. My specialty for now is oil related. I do some airlines, and I've done a little bit in telecommunications. So hope you have a nice day, and I'll be talking to you soon.